So no, simply having an LLC does not grant you with additional tax write-offs. In fact, it may end up costing you more money than it saves you. As a licensed CPA, I have clients who set up LLCs the moment they have a new business idea, only to further complicate their taxes, pay more money in annual filing fees, and in some cases end up paying more money in taxes, which then leads them to spending more money and time to get rid of these unnecessary LLCs, whether it be through consolidating their entity structure or dissolving their LLCs altogether. So to help you avoid making costly LLC mistakes, I want to debunk some myths about LLC tax benefits, and more importantly, make sure you understand when and how an LLC can actually save you more money in taxes. So let's jump right in. Okay, so let's talk about this big myth around LLCs granting you with tax write-offs. Nowhere in the tax code will you find that you must have an LLC in order to take certain tax write-offs on your tax return. Section 162 of the Internal Revenue Code specifically states that you can deduct all ordinary and necessary expenses incurred in carrying on any trade or business. It does not state that your trade or business has to be a limited liability company or LLC. You can operate your trade or business as an independent contractor or as a freelancer and earn 1099 income under your personal name and still take the same tax write-offs that you could as an LLC. When you operate an unincorporated business by yourself, you are considered a sole proprietor, which allows you to deduct Section 162 expenses on Schedule C of your individual tax return. And guess what? If you operate a single member LLC, you would use the same exact tax form on your individual tax return to file your taxes, which means there is no added benefit of forming an LLC from a tax deduction standpoint. And you have to be very careful here because many states will charge you additional fees and taxes simply for having an LLC. For example, California charges an $800 minimum franchise tax for simply having an LLC, even if you earn no income through that LLC. Plus, you have to keep in mind that in most states, they also have annual registration fees that you must pay in order to keep your LLC active. Not to mention that you may also have more tax return fees for each LLC that you set up that needs to file a separate tax return or tax form, which could cost you over $1,000 for each additional LLC that you need to file taxes for. So it is very important that the benefits of forming an LLC greatly outweigh the cost that you will incur to create it and maintain it. So let's look at that and talk about the true benefits of forming an LLC, which include various legal and tax benefits. So the obvious legal benefit of forming an LLC is that it provides you with limited liability protection. Now, this protection basically separates your personal assets from your business assets for legal purposes. So if someone were to sue your business, they would not be able to go after your personal assets in the event of a business liability. But as a CPA, I care more so about the tax benefits of setting up LLCs, and there are several. But the most significant one you must understand is the ability to change how your income is taxed. While an LLC does not grant you with additional tax write-offs, the IRS does allow LLC owners to change how their business income is taxed. And there are three primary ways that you can have your income taxed. Either A, as a disregarded entity, B, as an S corporation, or C, as a C corporation. Now, by default, your LLC income will be taxed as a disregarded entity, and this is the simplest tax status that you can operate as. However, it is also one of the most expensive options to operate under, especially as your business earns more income. And that is because disregarded entities are subject to the 15.3% self-employment tax, whereas S corporations and C corporations are not directly subject to this tax. For example, let's say your business earned $150,000 in income. Well, as a disregarded entity, you would pay almost $23,000 in self-employment tax alone. And that does not include the other federal and state income tax you will pay on that same amount of income. But if you operated under an S corporation and earned the same amount of income, you would only pay this tax on the W-2 wages you take from the business. So let's say that amount was about $60,000. Well, in that case, you would only pay about $9,000 in employment taxes as opposed to $23,000, saving you almost $14,000 in taxes alone. And this is just one example of how having your LLC taxed as an S corporation can save you more money in taxes. There are additional tax benefits of having an S corp, which include the ability to set up reimbursement plans and other fringe benefit plans that may also reduce your taxes at the same time. So just drop a comment below if you want to learn more about that. But there are also benefits of having your LLC taxed as a C corporation, because when you operate as a disregarded entity or as an S corp, your business income is taxed to you according to your individual tax bracket, which means if you are in a very high tax bracket, having your income taxed this way can be very problematic, especially when C corporations are taxed at just 21%. So for instance, someone in a 37% tax bracket could save 16% in taxes by having portions of their business income taxed as a C corporation. Or to put that in dollars, that is $16,000 in taxes saved for every $100,000 in business income earned at those tax rates. And again, that's just one example, but there are several additional tax benefits associated with C corporations as well, and also several rules and regulations you need to consider regarding accumulated earnings and so on. So make sure you talk to your CPA about this if you're seriously considering this. But my main objective here is to show you the true tax benefits of having an LLC. And you can start reducing your taxes immediately by carefully choosing how your LLC income will be taxed. Now, if you don't expect to earn more than about $50,000 in income from your LLC, then it generally will not make sense to change your tax classification because the costs typically outweigh the benefits here. Because when you're taxed as an S corporation or a C corporation, you are going to have additional costs like tax return costs, which could cost you an additional $1,500 because these entities are required to file separate tax returns, plus payroll costs, which could cost you another $1,000 per year since these entities are required to pay shareholder employees a W-2 salary. And then there's state filing fees to keep your LLC active, which varies based on the state, but could be another $500, plus any state taxes, like franchise taxes if you live in a state like California or Tennessee, for example, which could cost you another $500 to $800. And then we can't forget the most important cost here, the cost of your time, which could be spent growing your business instead of it being spent on administrative tasks like these, which I'll value at just $1,000 to keep this simple here. So when we add these hypothetical costs together and account for the payroll tax that you are going to pay on the W-2 you take from your business, we typically don't see switching your LLC tax classification as beneficial from a tax perspective and your overall savings, which means if you are looking to create an LLC solely for the tax benefits alone, then it would not make much sense to do so if you are not earning a significant amount of income through that LLC. Now, of course, there is still the legal benefit of having liability protection, so you will need to weigh that benefit carefully based on the legal circumstances of your business. But from a sheer tax perspective, please understand that an LLC does not grant you with any additional tax write-offs, but it does grant you with the ability to change how your income is being taxed from a tax perspective. And there are a lot of ways to be clever with this depending on your circumstances. For example, for some of our clients, we set up multiple LLCs to take advantage of each of these tax classifications. We might structure your primary operating entity as an S corporation and set up another LLC as a management company taxed as either a C corporation or a disregarded entity, even depending on the circumstances. Each entity classification has its own advantages and disadvantages, and it is important for you to understand these nuances to get the most tax benefit out of your LLC, or at a minimum, work with a CPA that can do this for you. And if you need immediate assistance with this, just apply to work with one of my CPAs today at mycpacoach.com.